Well, it should start with the lessons that the biggest rallies come in bear markets. Um, and Dave, and we're all laughing. We know that's the case. I mean, I want to be so bullish. I fully expect in the big picture, Bitcoin's going to go way up. But one thing we have to recognize, what's happened recently was a massive bear market rally for now. It could be a bottom like 2018 and 19. We hope so. But there's a big difference with...
And there you have it from Mike McGlone. And Mike's talking about there's a big difference. We'll get into what that difference is before this video's out, so make sure you watch this one to the end. Is the bear market over? Was the bottom established with the 15.6K range? Or are we going to see more lower price action before the end of 2023? Mike will be talking about all of this in this video, so make sure you watch this one to the end. Before we get to any of that, make sure you guys go ahead and check us out at Bitcoin Bros 26. We do this every single day for you guys, so we appreciate it. If you like this content, go ahead and smash that like button. If you haven't subscribed to the channel, go ahead and show us some love. And getting straight to it, what are we looking at? We're looking at the rational root. And what he's saying is the halving progress is 69%. So what does this mean? We'll take a look at this chart here. So this chart is since back in 2012, we see that every 69%, as far as time goes, when we get 69% the way to the next halving, that's when the reversal happens. We start to sort of trend to the upside. So as you see here, if we're looking right here, we sort of just traded sideways, then had a sort of a higher low / double bottom formation before we blasted up to the upside going into the next halving. And then 69% of the way, we had this dump here in the bear market down to 3,100. And then once we came up, we had that summer rally. This got extremely overbought quickly. So we had this rally before the halving, then had the dump with the pandemic dump here, then blast off up to the races. So we're at this 69% threshold right now where we're at in 2023. What's this going to look like? Are we going to have an overbought rally for this summer like we did in 2019? Or are we sort of just going to lull out for the next few months and then sort of have that upwards momentum going into the halving in 2024? Either way, if you look at the history of any indication of what's going on with Bitcoin, the next 2 years we're going to be getting extremely bullish. And then taking a look at an update from Stock Money Lizards, this is just the beginning. What's he looking at? He's looking at the RSI in this chart. And as you see, every time we come above this line here, this horizontal black line, this is the line in the sand. Every single time. We got rejected this time. When you blast through it, what does that indicate? That indicates a bottom is in and we're heading to the upside. Every single time we blast up, this is when we got extremely overbought early in the summer of 2019 rally. This is when we blasted up. Right now, we're breaking this trend. Are we going to have a continuation? Is Bitcoin going to have another rally like it did in 2019? Or is this going to get a rejection like it did back in 2015 and sort of put a double bottom before we blast out? Definitely a good find from Stock Money Lizards. An update from Titans of Crypto. If we're looking at it, the Bitcoin Pi cycle top, Bitcoin has recently crossed the SMA of a popular Pi cycle top. In 2015, we had a fake out before Bitcoin finally crossed it. In 19, we had a true signal. Which scenario is going to play out? Well, let's look at the chart. You see here in 2015, we had a double bottom. We had this fake out here, which he was talking about, this A leg, and then we came back down below the SMA before ultimately bouncing back above it and then going off to the races. 2019, we just had the B portion, no A portion. There was a brief rally, but it didn't get back above the 111 SMA. Once the B leg did come back above this, that's when we had this major rally in the summer. So right now, we just blasted back above the 111 SMA. What are we going to do? Are we going to have another fake out and go back below it in the short term? Or are we going to have a continuation and get extremely overbought in the midterm? But anyways, the Pi cycle top is definitely a good indication to pay attention to because this has called the top every single time. Whether we're going to be in scenario B or A, nobody knows. But what's the smart money doing? The smart money and the dumb money confidence spread is sort of in the dumb money confidence zone. So what happens every single time we're down in these zones? Every single time we're down in the dumb money confidence zone, a dump comes after. So we might have a little brief rally, then a pullback. Dumb money zone, we had a run up, but then a pullback. So this was going up and then had a major pullback. So right now we're in the dumb money zone. We've been going up. Do we have a pullback in store for the Bitcoin price action? Looking at this, the smart money zone, when it dumps, they're buying. That's off to the races. A dump, they're buying. Off to the races. A dump, they're buying. Off to the races. So right now we're going into a rally, but are we going to see a dump? It looks like there could be a pullback in store for Bitcoin. How low? Nobody knows, but we'll hear from Mike McGlone and see what Mike's take is. If you don't know who Mike is, he's a Bloomberg senior strategist, and he continues to stand by his $100,000 Bitcoin price prediction in the upcoming years. He says within the next 5 years. So without further ado, let's hear from Mike.
Oh, it should start with the lessons that the biggest rallies come in bear markets. And Dave, and we're all laughing, we know that's the case. I mean, I want to be so bullish. I fully expect in the big picture, Bitcoin's going to go way up. But one thing we have to recognize, and we can show some charts in a second, is what's happened recently was a massive bear market rally for now. It could be a bottom like 2018 and 19. We hope so. But there's a big difference with back then this is in the context of still a lower tide. Liquidity is there's a rug pull in liquidity still on a global basis. And that is not just the Fed tightening, every central bank on the planet is still tightening. And the key thing I'm watching for this week is we have the NASDAQ. It's just teetering on that 200-week moving average. It's broken below it. It's only done that 3 times in history. I'd like to show you that in a second. And every single time the Fed was easing and it came out of it okay. Fed's tightening. So I look at Bitcoin as, yes, it's a leading indicator. Maybe it's leading on the way back up. It maybe is putting a bottom like 2018 when it dropped below 5,000, then went back up about 5,000 and built a nice little island bottom. But like I said, the difference is liquidity is being pulled away still. And if the NASDAQ breaks down, everything breaks down, Bitcoin is going to be part of it. I still think it's going to come out ahead. So to me, that's where we stand in the big picture. Macro is I still think we're in the midst of the biggest macroeconomic reset of our lifetimes. I can detail why. Is we just had a 100-year event in terms of pandemic. We're having a historic war in Europe, and we're having a historic shift in political leadership in China. I mean, it's going back to the days of Soviet Union, when you have one leader and expecting to be economically viable. And we're still pulling the liquidity from the market on a global basis, a historical, unprecedented basis. And if equities go higher, if risk assets go higher, these liquidity is more likely to remain constrained from central banks. So what I'm showing you is a chart. We see this potential island bottom developing around 20,000. The same way it did around 5,000 back in 2018. The big difference is what I show you in white is the Fed funds futures. Back then, the Fed already started easy. And we held the bottom and broke out higher. And then we had that issue 2019 week. And this is the NASDAQ. The NASDAQ is at its 200-week moving average, not 200-day. 200 days is for day traders. The 200-week moving average. In the history of the NASDAQ, since it could be calculated, we only broke through that level 3 times. And every single time the Fed was easing. The last good example was 2008. Fed was easing aggressively. Right now, they're tightening aggressively. So you look at that, you can't be too excited about any markets until we give it some time. I'd say don't really. To me, this is an environment that's unprecedented where we're having bounces in what we know are bear markets. And the Fed just says, sorry, we're taking the punch bowl away. We're not going to bat you.
So there you have it from Mike McGlone. He's showing you on this chart right here that NASDAQ has broken the 200-week moving average 3 times over its history. And in these scenarios, Fed was easing. The biggest difference right now is we're sort of at this 200-week moving average, and the Fed is tightening, taking money out the system. It fell through this here, but then bounced back up and then rallied up to the upside because the Fed continued to ease and print more money to prop up the system. Right now, they're not doing that. Will we get a Fed pivot sometime this year? Or are we going to get more interest rate hikes throughout 2023? And will something break? to ask the question. What are your thoughts? Do you think we're about to go into a huge depression? Because if the Fed keeps tightening and something in the market breaks, it could cause a catastrophic blowdown to markets across the board. Please leave your thoughts below. And with that, that's all I have for you today. Once again, I'm Sean with the Bitcoin Bros. If you guys like this content, go ahead and smash the like button. If you haven't subscribed, go ahead and show us some love. We appreciate the support. With that, that's all I have for you today, and I'm out.